Good afternoon and welcome to the end of week market review for Friday, January 18th, 2013. As you can see, we've got a few things that we're going to be covering today. We're going to be starting things off by taking a look at the market news. We'll then go ahead and take a look at some economic reports and look at some daily and weekly charts for both the S&P 500 as well as the TSX. We'll then go ahead and take a look at the volatility indicator. Now the week has been a little bit hectic, so we didn't end up with any watchlist picks that we would absolutely recommend, and as a result we didn't have anything that we could look at there. Though we did end up having a significant track record from some of our ITL picks. Alright, so we can see that the markets are definitely closing at a multi-year high based off some good earnings that we've had. Now we were actually looking at a 5-year high, possibly even higher for the S&P 500. We can see that the Dow Jones is up 1.20% from last week's close, with the S&P 500 up 0.95%. So definitely some significant gains when we look at that. We can see that we've also had gains throughout all of our commodities, with oil up 2.30% from last week, now putting it to $95.87 per barrel. We can see that silver is up 4.63%, putting it to $31.88 per ounce. Gold is up 1.29%. It's now at $1,684 per ounce. And we can even see that our US-Canadian pair is up 0.84%. It is now at 0.9923 pips. So we've definitely had some steady growth throughout the week. If we look at our economic reports, we can see that we've had a pretty decent week, with some of our significant results coming from a lower than expected jobless reports claim. We ended up with 335,000 reportings compared to the 375 that they were expecting. So definitely some increased optimism coming from that. Now here's where things will start to get interesting. We can see that the S&P 500 was struggling to break through some overhead resistance around 1475. It found that same resistance back in the middle of September when it reached the high. It's now spent 2 days closing above that resistance level, confirming that we are closing in a 5-year high. We have not seen these types of growth for a significant amount of time. Now the markets do have the MACD with a rising bullish and with the black line over top of the blue line. While looking at the S&P 500 on the weekly chart, we can see this level of resistance at 1475, and we can see just how much higher it is right now. Where things really get interesting though is when you zoom back to that 5-year chart, where you can see that the last time that we saw these types of highs was back in 2008. Now if we look at the TSX, we can see that it's also closing higher, with it closing above a trend line resistance from a channel that was put in place throughout December and January. With it closing above beyond that and beyond its cycle highs, we can see that it's looking for some new cycle highs as well. Now the MACD is rising bullish and with the black line over top of the blue line. If you look at the weekly chart, you can see that it still is going to have some overhead resistance, with some overhead resistance from the middle of February. Now that's going to be around 12,750. So we still got a little bit of room to grow to that. And if we zoom out beyond that to a 5-year chart, you're going to see that yes, we've absolutely had a great run, especially since 2012, but we still have a significant amount of overhead resistance that we need to break through in order to make this comparable to the S&P 500. We would need to see the TSX go beyond 15,000 before we can say that it's doing just as well as the S&P 500. So although things are looking good for the TSX, They are doing great right now. The big picture still shows a lot of growth potential. Now, where things get really interesting is when we look at the volatility indicator. We can see that the volatility indicator is currently at 12.46. This means that it's gone down 6.74 from the previous week's close. We really didn't expect that the volatility indicator would be spending any amount of time at the 13 range where it was all of last week, but we ended up ending this week with even further declines. We know that the volatility indicator is happily traded between 14 and 16. And with the markets being so overbought, we really did expect that it was going to work itself back up there. But as you can see, it didn't, which means that there's still a lot of a bullish push coming from those earnings reports which are coming out. Still, though, we know that the US markets are certainly overbought, and we need to see that pull back shortly. So whether it's next week or the week thereafter, we will start seeing some pullbacks, and we will see this volatility indicator inch itself back into its normal trading range. And although we will see an increase, we don't need to be too concerned about that. Not unless it gets above 16. If you have any questions about anything that we've gone over in this presentation, feel free to email us to training@idealtradinglifestyle.com. You could also call us toll-free at 1-888-942-0266. Just make sure that you're dialing extension number 5. And as always, we would encourage you to continue to trade with your disciplines in mind. Make sure that you're not deviating away from your known results. By keeping through and true to your disciplines, you'll be able to make sure that your trades will continue to be successful. But as always, any trading decisions that you make are your own, so make sure that you're trading at your own risk. So with that said, this was the end of week market review for Friday, January 18th, 2013. Ciao for now.